Welcome back, traders and creators. In today's video, we're going to cover why you always need to use a stop loss while trading Forex, no matter how confident you are in your trading strategy. Now, for today's video, we're using the example of USD JPY on the 5-minute time frame. Now, this example is all throughout any time frame, but I'm just using the 5-minute time frame to use this example because I just found a great example of why you always need to protect yourself with the stop loss. You always need to treat risk management as a #1 priority if you want to be a long-term profitable and consistent trader. So what we have in this example is we have a downtrend and then the market stops, as you can see by this purple box right here. So the market is coming down, 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 and I have this purple box marked out because many people may see this as a support or floor zone, maybe a double bottom or some type of candle reversal pattern, right? You have your morning star or whatever you want to call it, engulfing anything, any reason for you to get into this buy position. So basically what happens is, let's say that we're a trader and we enter in this purple position for whatever reason, using our indicators, using our methods, our retail patterns, whatever they may be. But typically we can all be on the same page when it comes to where we're going to put our stop loss, either below the low or above the high. That's just the most practical place to put it. So let's say that our stop loss is below the low, marked out by this red zone. That is our stop loss right now, right? We want to move it just below that low because we're going in for a buy on this purple area. Now we have a pretty good zone right now of where we're going to buy the market, and we're feeling pretty lucky. Well, let's say we get into a little bit of profit and the market starts to consolidate, and right before the actual market move, you get stopped out. How many times has this happened to you where you get into a buy or sell position in the markets, and right before the market makes the move of where you anticipated it to go, you get stopped out of the trade? That has happened way too many times. And that is exactly why you always need to have a stop loss on one end or the other. And just to use it on the flip side, let's say that you are selling this market because you saw a break and retest, and now your stop loss is above this high. Let's say you got into a little bit of profit and out of nowhere, the market reversed. Could you imagine how much money and stress you would have saved yourself if you were to get stopped out above this high? But let's say you were a trader and you didn't have a stop loss. Instead of only losing, let's say, 5 to 10 pips, you're a trader that held on and you lost over 50, and now you're over leveraged and half of your account is gone. So no matter what strategy you use, no matter what method you use to indicate where the market is going to go, you always want to use a stop loss, because if you were a trader who had a stop loss above this high and you were to sell in this purple area, your stop loss would only be 5 to 10 pips. But let's say you were so confident that the market was going to drop, and then out of nowhere a news event comes. Instead of losing 5 to 10 pips, now you're losing around 50 pips. And so you 10x'd your loss, which is probably half of your account. Because if you're not using a stop loss, you're probably not using proper risk management either. So I hope this video really opened up your eyes to understand exactly why you need to use a stop loss no matter what, because it is something that can get you out of a really bad trade whenever fundamentals come out, or you may have missed something in your technical analysis. So I hope this video helped you guys, and if you haven't been using stop losses, I highly, highly, highly recommend you change that today. I'll see you guys on the next video.